Okay, welcome everybody. I'm now unfortunately in transit between the countries, so I will just, Michał will run the conference. I will just give you a quick update for the second quarter. Michał, you can show the major events, yes, that happened. Basically, we had a very good second quarter, like in the first quarter for banking. With very good impact on profitability. This was a result of implementation projects that we were realizing, and this is just continuity of the trend from Q1. Additionally, IPD, Independent POS Network, and ECR, Electronic Cash Registers, this is very nicely growing and developing. Also continuity, we will be observing this as a separate business line from next year. This is because they grew enough, in our opinion. Also, traditional POS services has grown very nicely, yes. Another observation is huge devaluation of Turkish lira. It's huge for the second quarter, but if you compare it to inflation from beginning of the year or even last year, it's still not that big, but it creates a lot of impact and turbulences over our business. Positively impacting banking, a bit dedicated solutions. In Payton, it has more negative result because we have more revenues in Turkish lira, but luckily the growth of the business in the e-com is compensating for this overall thing. In processing, another business line, we have a very nice and very substantial growth in the transactionality, size of the business, currency conversion rates, and charges made on this. So processing business line is growing like in the first quarter, very quickly. Also from the events, we had a small, I would say acquisition. I wouldn't call it acquisition. We bought a small business. Serbia, buying some e-commerce customers, expanding our presence in that market. So we are very happy with that. And last but not least, very good quarter for independent ATM network for Serbia, whereas independent network working not for tourists but for local residents, and they have grown by 70%. Also thanks to retaking from Euronet some of the services on ATMs, which very much contributed to the business. So overall, good quarter, and the rest I will pass to Michał to continue with the major deals and the numbers. Michał, please, and I'll have to disconnect.
Okay, thank you. Okay, so starting from ASEE part and banking business unit, we can see a few deals in area of channels where we solutions for mobile applications, adaptive elements to banks. Also some deals in area of security and multi-factor authentication. We also concluded new deal for digital edge, so our banking solutions, internet mobile banking for one of the banks in Serbia. We succeeded to sell anti-money laundering solution to banks in Serbia and Bosnia, and a very nice deal for anti-fraud, our own proprietary software Inact. We sold it to one of biggest banks in Turkey. On top of this, some security authentication solutions in hosting mode, which covers a few countries, and this solution is hosted in our data center in Croatia. For dedicated solutions, very nice deal for our collaboration platform called Live. So call center, contact center, ticketing systems with some CRM functionalities. We have deal for utility company in Lithuania, so outside our region. Then a few deals in area of BPM in Serbia. and based on our proprietary solution ABC, and also some BPM solutions delivered to bank in Croatia. We had also few deals in area of lease flex, finance flex. So this is the business we have and solution we have in Turkey. Not very successful for now. So every new deal is very important for us. And then we have another from BPM area, Documenta DMS, for 3 public sector companies and 3 private sector companies in Romania, and one of the only third party solution we are mentioning. So Dynatrace, this solution for testing software, and we had few sales to clients in Turkey from different industries. As for Payten, in e-commerce, we have a few implementations of our gateway solution to different clients, but also implementation like services related to moving to private cloud for some payment facilitator. In terms of virtual POS, we connected a new large client from rent-a-car industry. And for processing, we have concluded contract for switching processing of ATM transactions, including DCC and surcharge for one of the banks in Serbia. And we have also services related with migration of bank to the new core solution. And in area of more traditional, this part of Payten related with ATM and POSs. So we have some deliveries, classical deliveries of terminals and ATMs to banks in Bosnia and Croatia. We have also implementation of SoftPOS solutions. So this application which allows other devices like mobile phone to be in a POS terminal. We implemented this for a banking group for few countries in a southeastern region. And we have some bigger merchants connected to our single POS solutions, which we are offering primarily in Croatia. So some company from clothing retailer and some technical equipment retailer. So this is about new deals, and let's move to our results and financials. So before I will go into details, a few words about slide, what we see here. So the first 2 columns are full data as reported in last year half year financial statements, and as reported in our estimates, which were published yesterday. Another columns, those with heading no hyperinflation. These are figures excluding IAS 29 accounting, so hyperinflation accounting. And in following slides, we will be commenting those figures excluding hyperinflation effect, which we believe is pretty technical and accounting and does not reflect business properly. So in terms of revenues, we have growth year over year by 15.5%, and most of this growth, like 2/3, is realized by our own activities, so on software, on services, mainly in banking business unit, but also in processing, e-commerce, and BPM solutions within dedicated. When we look at margin one, so this measure which we use for backlog, so basically revenues less third-party COGS. On this level, this growth is even bigger extent generated by own activities. Around 90% is from own activities. On operating profit level, 12.6 million euro and 14% growth year over year. And here, one thing to notice, like during previous year, usually growth in Polish zloty, so the currency of our financial statements were higher than in euro. This year it's opposite, and this is related with recent strengthening of Polish zloty versus euro. When we look at the EBITDA level, in absolute numbers, change is pretty similar, 200K less than on EBIT, and this is related with lower depreciation on assets recognized as part of purchase price allocation process. Looking at the numbers excluding hyperinflation, this time they are lower than, they are higher than those complete estimates that which we have published. So this is in opposite direction than in previous year. And this is related with situation with inflation in Turkey, which recently this year decreased. So indexation component of hyperinflation reporting is lower. But in parallel, during June 2023, so after elections, Turkish lira significantly lost value versus other currencies, zloty, euro, but in our case, zloty is important. This drop of value of lira results in a negative effect on translation of hyperinflation figures to our reporting currency, because based on this hyperinflation international reporting standard, we are obliged to recalculate P&L of Turkish operations not using average exchange rate for the period, so in this case for half year, but taking exchange rate on a balance sheet date, like for balance sheet positions. And this balance sheet rate was significantly lower than average for whole period. When we look, I will come back to figures excluding effect of hyperinflation. So when we look at net profit, here growth year over year is higher than a bit more than 18% year over year, and we have here two main reasons. One is financial activity, which has balanced higher by 1 million euro than previous year. This was generated by two components. One is FX gains on revaluation of assets and liabilities in foreign currency. It's more or less 1/3 of this growth, and the rest is recalculation of contingent considerations, so earnout valuations for entities which were acquired in previous years, and recalculation of put options valuations. So in general, positive effect of finance activity. When we talk about taxes, here we have increase of taxes by 800k euro, and this leads to increase of effective tax rate. But I will comment more on taxes on slide regarding H1 figures to avoid movements between quarters of dividends. Below we present those non-IFRS figures. Only to recall, the main difference between non-IFRS EBIT and regular EBIT is effect of PPAs and their amortization. So assets which we recognize on acquired entities. And in case of net profit, additionally, effect of recalculation of contingent considerations and put options. Let's move to business units. So in Q2, the growth was driven by banking and payment. Those two lines. In banking, we have a slight growth of profitability to 23%, and this is level very similar with Q1, so according to expectations. As Piotr mentions, we are in progress of delivery of few big banking projects, so they last for longer than 1-2 quarters, so it's quite obvious that quarters should be pretty similar. On revenue side, we have growth of 3.6 million euros. It was generated by all business lines, so the core channels and security and compliance. And on operating profit, result increased by 900k year-over-year. In case of payment, we have also slight increase of profitability with some changes in structure of business. Those first two lines, so e-commerce and processing, those which are run in hosted SaaS mode, in e-commerce by 1.1 million euro year-over-year. More or less 2/3 of this growth is thanks to payment gateway offering in Turkey, and the rest is generated on other markets like Croatia, Romania, and Serbia. Processing traditionally growth mostly in Serbia, where we have component center for this. But also we are from Serbia processing some transactions in Bosnia and Macedonia. Moving to those more traditional lines like ATMs and POS. In ATMs, we have drop of revenues year-over-year, and this is mostly related with deliveries of ATMs. Last year we had big deliveries completed in Serbia, Croatia, Kosovo, and Macedonia. This year we didn't, but this drop was partially compensated by deliveries in Romania. So this is pretty natural that deliveries are not stable quarter-over-quarter, year-over-year. These are projects which happens from time to time. And in POSs, here we have nice growth of 3.7 million euro and we reached 25 million euro revenues. And this growth is generated in Western Europe, where we have continuation of this trend of delivering Android POS and replacing networks to this new type of devices. But not only Western Europe, we have also growth in Bosnia and Czechia, where we have some deliveries of equipment. In this line, we also present two lines which are offered not to banks but to directly to merchants, so in the independent POS deployment and electronic cash registers. So here those two lines contributed around 1 million to the growth. It is mostly Croatia, but what makes us happy, not only Croatia, we managed to step into to Romania, and we have some growth there. We have some revenues there. So coming back to results in payments, this 4.4 growth of revenues allowed us to deliver 800k euro growth of operating profit in payment solutions unit. And the last one, the dedicated solutions, we have here a slight drop of profitability with a drop of growth of revenues, but by almost 4 million euro. This growth is mainly due to resale, so third-party solutions resale in Serbia, Romania, and Kosovo. Some lower result this time in Bosnia in area of intelligent traffic solutions, and in Turkey in area of those finance lease flex solutions which I mentioned when describing new deals. On operating profits, slight drop year over year to 2 million euro in 2023. So let's move to result by geographies. Here we have the biggest growth in four countries geographies. So Croatia first, 1 million euro growth year over year, and three our business units: banking, dedicated, and payment. All of them reported growth. In banking, around half of this amount in area of channels, in dedicated solutions, mostly in live BPM solutions. And in payment, we had this growth of merchant-related business, so IPD and ECRs, which was partially compensated by lower deliveries of ATMs. Second country with nice growth, 100k year over year, so big growth. This is mostly in dedicated solutions in area of third parties, and in payment in e-commerce and ATMs. Also in others, so this is where we report few smaller countries, 400k higher result, and it was delivered by Albania, Bulgaria, and Kosovo. And last from those with higher growth, Serbia, 300k growth to 3.2 million, and here growth is mostly in dedicated solutions, where we have those deals for business process management software and software implementation. About drops, we have two countries with drops. One is Bosnia, 500,000 lower result, and this is related with dedicated solutions and intelligent traffic software. This is not something we are very worried about. It's more related with phases of contracts where we are and what we are currently doing, and because we have projects, so nothing to worry about. And Turkey, here we are suffering from this, what is happening in Turkish economy, so high inflation. Employees saying the inflation is higher what officially reported by statistical office, and a recent drop of lira value versus other currencies. Anyway, comparing to Q1, we managed to improve, and the drop quarter to year over year in Q2 is smaller than it was in Q1. So this is about Q1. Let's move to year-to-date results for H1. Structure of slide is exactly the same as for Q2, and in general, comments will be also very similar. When we look at revenues, almost 18% growth year over year, and very similar split by activities. So again, around two-thirds of revenues growth generated by own activities, and around 90% of our margin one also generated by own activities. On EBIT level, we have a growth year over years a bit smaller than for Q2. This is due to Q1, which was weaker, and the same applies for EBITDA. What I would like to mention here is this difference between hyperinflation and no hyperinflation reporting. As for revenues and down to EBITDA, the situation is similar as in Q2. It's a bit different below with net profit, where those figures with hyperinflation are higher than without. And this is related with indexation of goodwill, which is reported in net profit, and this is where we have quite big gain, which was reported in Q1 already. Coming back to years without hyperinflation, when we look at H1 figures, accumulated figures, growth of net profit is lower than the growth of operating profit. And here we have two reasons. One is balance of financial activity, where we have we have a lower positive gains on FX revaluation of assets and liabilities. Gain is it is still gain, but it's simply lower than last year, and it was partially compensated by gains from revaluation of contingent liabilities and puts, but still it's we have drop here. And second is increase in taxes. Taxes for H1, they are higher by 900K year over year, what means increase of effective tax rate by 2.2%. But we should recall here this one of which took place in Q1 2023, where Turkish government decided to implement one of earthquake-related tax. For us, it was around €500,000 additional tax, and if we exclude this one-off tax, then effective tax rate for H1 is 0.3 percentage point higher than previous year. So we can say it's on similar level. So this is about figures on group level, and about business units. Again, very similar. Strong banking. What we already told a few times. Almost €2 million a higher result year over year. In payments, we managed to compensate this drop from Q1 with Q2 figures. So in overall, in the first half of 2023, result was higher by $500,000 versus previous year. When we look at revenues, structure in payment. Again, very similar picture as for Q2. Figures are of course higher, but the same trends: growth in e-commerce, processing, and POSs, and lower revenues in ATMs. And for dedicated solutions, also very similar picture. Growth of revenues, mostly on third-party solutions, but not only. We have also some BPM services growth in mostly in Serbia. And in dedicated solutions on operating profit result very similar to the one from last year, only 100K less. When looking at results by geographies, most of them had growth in first half of 2023 comparing to 22. Biggest growth in Serbia, where growth is in all business lines, in banking, where we have those implementations projects, in dedicated solutions, and also in payment, especially in area of processing and independent ATM network. Also very good first half of the year for Croatia, nice growth. Banking as in Q2 and dedicated solutions where we have live and BPM, and also in Payton. And Iberia, where we have growth by 500,000. In fact, this growth would be higher if not one-off cost related with termination of contract for BPO services, call center services. This is something what we mentioned during Q1. So we can say this growth is fully in payment business unit. And for drops, the same countries, so Bosnia and dedicated solutions in area of intelligent traffic. This is where we have drop year-over-year, and Turkey. Here, as I mentioned, Q1 drop was higher than Q2, and accumulated drop is year-over-year drop is 1.8 million euro, mostly in payment, which is as Piotr mentioned at the beginning, due to structure of revenues, which are mostly in local currency. This unit is more let's say exposed for challenges related with inflation and difference between official inflation, which is the one which we use for indexing revenues and contracts with our clients, and this non-official inflation which employees use to when negotiating salaries. Okay, so this is about results. Let's move to liquidity and where we are with cash and other positions. So 3 million euro more cash as end of June than end of 2022. Of course, during July we have paid our dividend, so we distributed around 70 million euro out of this. In H1 we had growth of lease liabilities. Of course, we have repaid those current ones. It was around, as I remember, 4 million euros, but we also signed annexes to our contracts, and some of them were recognized as new assets and new liabilities. So this is why we have growth. For bank loans, we have slight drop of liabilities. We paid back some of more project-related debt in Bosnia, in BSTS, or on Serbia and Croatia. And in deferred acquisition related costs, so contingent payments and put options, we have growth by 1.7 million euro. But this I would call it technical growth, because we present here only short-term part, and simply some of those liabilities related with acquisitions from previous years. They were now they are falling into this 12 months period and are presented in short term. So overall net cash, it increased by 3.5 million euro. What below net cash? So in case of receivables, we have dropped around 8 million euro. But what I believe is important to mention here is that those invoiced receivables, so they decreased by more than 16 million euros. So clients paid us receivables, but in parallel we have growth of recognized revenues based on POC or accruals, and we have growth of receivables related with this by more than 9 million euros. This is related with the stage where we are in delivery of our contracts. So as we were describing, we are currently in progress of delivering few banking projects, big projects, which takes few or even more months. And for those projects, we recognize revenues based on POC, so how much we have of work we have done, and invoicing is from time to time. This is why we have this growth of recognized receivables which were not invoiced yet, but for sure it will happen in coming months. When talking about liabilities, the balance dropped by 13.5 million euros. So we settled a big part of them. And in inventories, we have growth by almost 4 million euro. This is related with goods. So inventories we bought for specific projects. In area of ATMs and POS resell, this classical business, we have significant growth in Serbia and Spain, where we bought some devices which will be delivered during Q3, and also in area of intelligent traffic solutions, we have some stock of equipment which will be installed in tunnels and on highways during Q3. So this is about balance sheet position, and when looking at cash flow, pretty solid operating cash flow on similar level for last 12 months as for whole 2022. But of course, it means a slight drop of conversion ratio of EBITDA to operating cash flow, as EBITDA it increased during H1. This is related with what I described on receivables. Yes, so the fact that we have result, we have revenues, but they are recognized based on work progress and not invoiced yet and not cashed yet. Other positions in cash flow pretty similar, nothing material, no material changes. Smaller M&A expenditures, because we haven't closed anything this year, not yet. And below free cash flow, debt increase smaller than last year, and bigger debt service. So as I mentioned, we repaid part of our loans, but we have also repaid some of leases during H1. So this about cash flow, and let's move to outlook for 23. So traditionally, backlogs, we present backlogs, 8% growth in backlog for Q3 2023 comparing last year. When we look at full year numbers, growth is 11 points. When looking only on ASEE part, 7% growth for Q3 and 11 for whole year, and in payment slightly higher, 9% for Q3 and 11 for full year. So it looks good. Nothing to worry about, despite it's slightly lower than presented after Q1. In general, we are positive about this year, and when looking at how analysts show us and consensus, okay, not full this data to which we have access, we are pretty sure we should be able to match this consensus and deliver those three results. Those figures and this forecast, this consensus, which we are referring to, we treat it as something what we can deliver without acquisitions. As I mentioned, we have not closed any of them yet. We have few projects open. We are working on them, but and we really hope that some of them will be closed. But anyway, effect and impact on Q3 on 2023 figures will not be very material, because only few months will be included. Okay, so this is about results. So do you have maybe some questions? There are not many of us, so maybe you can raise hand and ask a question, or you can put question on chat. Okay, I don't. Oh, someone is right. Okay. Let us wait a moment. Okay, we have question. Okay, so question is about decline of interest from clients side. So we don't have it. We don't see a decline of demand. Actually, none of our business lines. Even in some of them, we see potential for new projects. We see potential for projects where we didn't have business so far. Like we see some potential for intelligent traffic solutions in Romania. We are working on this. It will not be fast, but still we see demand. Yes, and the same in banking. There are orders. There are new projects. We are talking with one of international banks about implementing loan origination for banks from this group in few geographies. So far, we worked with them, but only for corporate. But now they are considering to use our solution for retail. So we see potential, and we are not worried. Regarding employment situation, what improved this year for sure is rotation. We really see that rotation dropped. Yes, our employees I'm not saying they are not leaving. We have rotation. They are leaving, but it improved. It's lower. And this is also somehow related with salaries pressure. Taking aside Turkey, which is specific, of course, we have increase of salaries and there is a pressure, but it's not growing anymore. So the situation is a bit better than last year. And Turkey, and I put Turkey aside. Yeah, here it's difficult, but also we see improvement in terms of rotation. Turkey used to be, and in fact it still is country with the highest rotation we have in our group. In some teams it even exceeded 50%. But here we also see improvement in terms of rotation. Even after Q1, we had to let's say slow down some recruitments because the leaves they really slowed down in Turkey. About M&As, there is many opportunities. We are currently in process of we closed two due diligence processes. We have two open, and we are starting another 3 ones. So there are opportunities, and we are looking at them. If prices are lower, maybe slightly. It's not that there is some huge difference. I think there is still a lot of money on the market, so prices are not dropping that much. But there are few interesting topics. Some of them in our region where we are working currently, so Southeastern Europe. They look very interesting for now. It might be a few synergies with those businesses. But let's see. We are starting due diligence, so we need to look at it more deeply. But also we are looking at a few companies outside our region. We really hope to close something this year. One company we were mentioning them. Technically, we closed SPA some time ago, but still we are waiting. It's already 1.5 years. We are waiting for decision and approval from a central bank to complete transaction, and we are positive that we will receive this decision. I know it will be 4 months from now, but it becomes to look optimistic. Anybody else and any question? If not, okay, formally we are still in closed period because we will publish formally our financial statement next Wednesday, end of the day. So from next Thursday, closed period is finished, and we invite you to contact us, and we always like to discuss and tell what happens in company. But if it's related with estimates, only those which we published, we can also comment them during next days before closed period is finished. So if not, no more question, then thank you a lot. Thank you for joining us, and hear you next time. Bye bye.